Tom Mundy, hello.
Hi, John Baptiste.
You're the head of capital market research EMEA for JLL, and we'll talk about real estate investment across Europe. We've seen that it has been a bit subdued in the first month of the 2023, and we see lower capital volumes being raised from the asset class. So have institutional investors lost faith in real estate because of the current market environment?
Thank you for the question. It's a very interesting question, and it's very relevant right now. Yes, you're absolutely right that investment in European and EMEA real estate for the first half of this year was weak and arguably weaker than the market expected. There are many reasons for that, but primarily it's a function of the rather uncertain interest rate environment and inflation expectations, which are constantly shifting. But it is also a reflection of market uncertainty. There have been numerous destabilizing factors in global markets, not least the issues around SVB in America, also the Credit Suisse UBS relationship in Switzerland. It's been uncertain, and that's made underwriting conditions quite difficult for investors. But it has also made real estate as an asset class more challenging from a return perspective relative to other asset classes, particularly fixed income. So it is a more complicated market. But I don't think that necessarily means that investors have lost faith in the long term. I think in the short term, it's challenging because there are clear, as I just said, there are clear challenges. There's considerable uncertainty, but we will move through that. And from what we're seeing in the market, there is evidence that there is momentum starting to build. I'm not sure that we'll see a rapid recovery this year, but there's plenty of evidence to suggest that it will start to build through next year. So I wouldn't say that the market has lost faith, but the market is just spending more time trying to figure out what the next steps are.
Okay, that's the perfect transition to my next question, because JLL's latest research just reveals that 85% of investors do anticipate liquidity and transaction volumes to increase by the end of 2024. What will it take for this outcome to become true?
So there's two really important factors. One is that we need to see a stabilization in the rate cycle from the European level and also obviously from Bank of England. I think there's plenty to suggest that we are getting towards the end of the rate cycle, or at least we are getting to an environment where core inflation is looking to have moved well below its peak level. That being said, there is still uncertainty, and the variance of views on where inflation, particularly in the UK, will peak, where interest rates will peak,
yes,
creates a degree of uncertainty. So I actually think that there's a very strong likelihood that once we get through that first point, which is stability of interest rates, and then we combine it with the second point, which is a growing acceptance of a significant shift down in capital values. So valuations are starting to have moved and potentially could move a little bit further, but the market is pricing that in. Once you've got more clarity on that, then I think you start to see capital moving back into real estate because, as I alluded to earlier, underwriting becomes more predictable. So in our view, I think it's likely that the response from an investment perspective will come through 2024. I think it'll be a relatively moderate response. I don't think we're going to swing back like a hockey stick shape to what we had in 2021 or indeed even in 2022. But we will get there. I think we'll reach the bottom of the cycle at the back end of this year, and we will start to build through next year. And I think the weight of that transactional activity is more likely to come in the second half of next year than in the first half of next year.
Okay, let's go a bit deeper in the typologies. What sectors or markets do you see being the first to rebound?
Again, I think it's a very good question. It's what the market is asking. My starting point would be to say that it would be a mistake to think that all real estate in Europe across all markets is behaving in the same way, that there is one equal response. It is absolutely not the case. Some, at a geographic level, some markets have priced all this uncertainty far more efficiently than other markets, or priced it earlier Some markets are pricing it later. Germany, for example, was quite reluctant to move. That's led to a degree of stagnation in investment volumes, but it's starting to shift now. So we're seeing quite a movement in valuations in Germany. UK moved, and France too, exactly right. And France has also shifted, and the UK has shifted, and volumes are starting to pick up. So at a geographic level, I would say that there was an earlier move by the UK and France, a later move by Germany, but by the back end of this year, I think we'll all be in the same place. Sectorally, the big discussion at the moment is offices versus industrial and logistics and living. So one sector that's not so much in vogue is offices. One sector that's absolutely consensus is logistics and living. And I think that's a rather unfair categorization. I think there's a lot of sentiment against offices at the moment, but I think to some degree it's unjust because it looks at the sector from a holistic overall level. What we're finding actually is if you look across European markets, if you think clearly and rationally about the restructuring of office sector and you think clearly and rationally about the return to office dynamic, there are lots of markets in Europe where we're seeing a really positive rental growth outlook for offices if you're buying the right products in the right market. And for that sort of product, I think it'll continue to do quite well. And I think it'll come out of this cycle pretty buoyant. However, sentiment is still quite challenged because of that uncertainty. So generally speaking, we're seeing more sentiment, positive sentiment towards logistics, more positive sentiment towards living, and away from all of that, and a growing interest in good quality, particularly grocery anchored retail. Not enough people are talking about retail at the moment. And I think that that's kind of going a little bit unnoticed in this big discussion of offices versus logistics versus living. So different paces of recovery, but all those sectors having very valid arguments in their own right.
Okay. Tom Mundy, thank you for that interview. And we hope maybe to see you a bit later on BiTV.
Pleasure. Thank you.